money. What positives can investors focus on right now? It feels like there's a lot of...
We've seen that correct quite meaningfully. So there are opportunities there to help think about how we position portfolios going forward as well.
Which goes to the point about having a long-term goal.
Yeah, I think she's really kind of hit the nail on the head with her question by saying, I'm investing for the long term.
Hello everyone and welcome back to another True Potential Do More With Your Money podcast. It's episode 119 today, and if you've ever wanted to ask a question about investing, or in fact just how to do more with your money, this is the podcast for you. And I know lots of you have been asking exactly those questions. How do I know that? Because you've been sending them into us and we've got them all here. And I've assembled the expert panel that's going to help answer those questions over the next 30 or 40 minutes or so. So let's meet them. We've got Jeff in the house, Hayley's here as well, Aidan's back, and Helen is making another appearance as well. Welcome everybody.
Hi,
Thanks.
How are you all doing?
Very well, thank you. Yourself?
I'm good, but not as good as you, because you're just back from a big tour of America, aren't you? Or at least a visit to America.
Well, it was a visit to America. Yes,
Yeah.
I was in New York for some time, and then 2 weeks of seminars as well. So it's been a hectic time on the road for myself, to be honest. So I'm glad to be back with my dog. Glad to be back eating healthy food, and glad to be back on the podcast as well.
Are you really glad to be eating healthy food?
I
certainly would be.
My body feels better for it.
And of the seminars, I know people have been hearing about those and your trip abroad. What's the best place you visited? I mean, I suspect I know the answer, but tell us what's the best place in the couple of weeks you've been in.
I think the seminar tours were fantastic. Yeah. We visited some great places, but none of them really shine a light on New York, to be honest, and some of the nice food and places, stuff like that I had over there. So yeah, the seminars were great. We've visited some wonderful places, but it's no New York, that's for sure.
It's so good they named it twice.
Yeah, that's true, yeah.
Well, look, it's good to have you back in, and I'm going to kick off with a question, actually, we've got in from Henry, who loves the podcasts, and he says, you all seem to get on fantastically well. But it's a great place to work at True Potential. Is it really? What's it like to work here? Aidan, come on, since you're back.
Yeah, I think it's a fantastic place to work. I think, allegorically for myself, I've worked here just over 10 years now.
Yeah.
And really, I think the average employee works here for about 8 years. So we've got great levels of retention. People really get a lot of support and get a chance to really grow here. I think, people who have been on the podcast previously, they'll have started in, administration jobs, just came into the business and they've risen up to the points where they are now in senior management. And I think that's really, a fantastic part of it. And I think the other side is, we renovated the office during the lockdown. Mm-hmm. So we've got this fantastic office to work in now as well. It was fantastic before, but just to freshen up a bit was great. And also, if you think about the way we supported people during lockdown, when we were able to, we were doing monthly staff webinars to keep people engaged and, active and social with work. But on the other side of that, when we started bringing people back into the office, I didn't know a single person who thought it was awkward. It was all done exactly right. So I think, in terms of the support that we offer our staff is fantastic. And, we've got a summer party coming up soon, so we're all looking forward to that as well. There's always a good do with True Potential as well. So yeah, fantastic place to work.
Yeah. Work hard, play hard. I think.
Work hard, play hard. That's certainly our ethos. Yeah.
Helen, what do you love most about TP?
Oh well, I'm the opposite. I haven't been here very long. I just joined just after lockdown. So and I actually had a bit of a baptism of fire because I just joined. Then a few days later was the summer party. So, but everyone, yes, I saw everyone's true colours straight away. But no, it was great. And as I say, I think what's really nice is that now, because we do hybrid working, so we work from the office and we work from home, it does allow for that flexibility as well. And it's nice actually being in the office sometimes because you get to know everybody, especially when you first join.
Yeah.
You know everyone's name over Teams and things, but that's about it. So
Same for you guys?
Yeah, pretty much. I mean, I've been here 5.5 years, so quite a while. Again, what Aidan said before, I started off doing something completely different to what I'm doing now. The growth, the support that you get, and also just the people that you work with. we all do actually really get along. It's
Surprisingly.
I know. However, I am slightly gutted about the summer party this year because it is on my actual birthday, but it is 5 days after I have a baby. So unfortunately, I won't be able to make it.
Well, there might be a way, you know.
I mean, I'm there in spirit, I think.
Jeff will have your drinks, don't worry.
I suppose as well, it's all about the collaboration. Everybody wants to work together
Yeah,
and work
absolutely.
together well across all of the departments,
Yeah.
even when we're hybrid or in the office, which is a great testament to how people want to work together. But at the end of the day, what does it come back to? It comes back to everybody's focused on that goal, the goal of what are we doing within True Potential. It's about the end client.
Yeah.
And everything that everybody's thinking about, that collaborative nature, is to deliver product and solutions that our end clients need.
Yeah.
Yeah, agree.
Well said. Thank you, Henry, for your question. Or was it Daniel Harrison who sent it in? We don't know. But anyway, Henry, thank you. A lot of the questions that have come in obviously have a theme around investing and what's happening in the markets, understandably, at the moment. So we're going to be hearing a bit from Jeff over the next 25 or so minutes, as well as the others, of course. But Jeff, just before we do, we're not going to do a sort of markets update as such today. We're recording this on Thursday, by the way, so there's a bit more time in the week to go, so it wouldn't make sense to do an end of the week sort of review. But if people do want to know about the markets, we do have morning markets that you and the team do. So just maybe explain for any new viewers what that is.
I think for us, the best place to go to get information on markets on a daily basis is, as you say, morning markets, which the team put together. And it's very much a way of us sort of taking a view on what's been happening over the past 24 hours, but trying to cut through some of the noise, that sort of sensationalist headline that's out there to grab your attention.
Yeah.
We try to just focus in on, this is what it is, this is why it's interesting, and this is what it might mean. So short, 2 to 3 minutes, but definitely, if you're not signed up, just subscribe to Morning Markets to get that directly onto your YouTube feed.
Exactly. Okay, let's move on. Christine sent a question to say, what positives can investors focus on right now? It feels like there's a lot in the news. It's all about doom and gloom, and you do get that, don't you? Just watching the news, picking up newspapers, you know, it's always focusing on the negative. But I mean, and we don't want to talk ourselves into a negative in the country generally. So let's think about maybe are there any positives out there that we should be thinking about?
I think that's an important point, because a lot of what happens in asset markets, that happens in economies, is about psychology. If you feel down and things, it continues to build on itself. So if we take a step back, and I think, you know, Bank of England governor maybe didn't talk about some of these things when he spoke last week, and he talked in a very negative view about what was happening in the economy. And yes, there are some issues that we're all aware of, but then looking at it from the other side, we have got record low unemployment in the UK, an unemployment rate of 3.75%. We have to go back, I think, to 1974 to get a rate that's comparable to that. The other thing, for the first time in the ONS data, so the Office of National Statistics that published the information in the UK economy, we saw that there are more job vacancies than actually unemployed people in the UK for the first time. So the employment backdrop continues to remain really robust, particularly in the UK, but a similar picture actually if we go across to the other side of where Aidan's just been in the States. We've got near full employment there, but also we've got 1.8 jobs for every unemployed individual there. So there are positive dynamics that one can think about, but clearly that doesn't sell a newspaper. It doesn't get you to click on a headline. You know, thinking about just that last week, there was one of the sites that I use, and it was talking about sterling had plunged as a result of what Andrew Bailey had said, and I was like, well, that sounds very interesting. The best see what that is, and it was actually it was down 1%. And I kind of think that 1% is maybe a normal type move, whereas
a headline that said sterling has fallen ever so slightly,
maybe some
wouldn't
5
exactly
or 10.
have the same effect.
No, but it got me to go and click on it, which is the same that anybody would do, because that sounds major.
It does cause problems, because some people don't always read that full article. They'll just read those headlines as well, and it's that scaremongering that just sort of snowballs, doesn't it?
Well, as well as, you know, we want to focus on if I give you the no spin either way version of events, but, you know, we're not going to shirk from some of the trickier questions as well. And John sent a question in to say, look, do you feel that we're heading for a recession in this country, and perhaps across a global recession as well? I mean, is that where you think we're heading, Jeff, or is that one of those headlines that we shouldn't read too much into?
I think it's one of those things that is a possibility. So there are outcomes for the economy that we can look to. If I think about it from how we discuss it within the True Potential portfolios, how we discuss it with our managers, it is a scenario that one can consider, and one should have a plan to think about how one wants to allocate in that environment. It's certainly not our base case at this point in time. Particularly in the case of a global recession, that's not our base case at all. When we look at where global GDP growth is likely to be both this year and next year, it still remains in positive territory. So a recession is technically defined as 2 quarters of negative growth. Now, we've already had 1 quarter of negative growth in the US, which was the first quarter, but that was very much because of the function of statistics, how trade worked, imports and exports. We haven't had a quarter of negative growth in the UK. Indeed, we've seen actually okay growth, slightly better maybe than people had expected. Yes, we're forecasting growth too slow. The UK looks around 1.9, 1.7 for next year, so slowing growth, but certainly not moving to a recessionary phase at this point in time.
Yeah.
But it's certainly something that we have to be aware of and consider the possibility. And that's why, through the engagement that we have with the management partners that we have in terms of our investment partners, it's part and parcel of that ongoing discussion, such that we are aware, considering if that does become a base case, how does one want to position the portfolios as a result of that? But then we take the other side of that, and if just to broaden it out in a global context, we've got China. Yes, we all have discussed the lockdowns, the very significant and constraining impact that's had on the domestic economy in China, but also the exports from China. But we've incrementally, I think, started to see a little bit of acknowledgement from China that they might have to ease some of those very restrictive measures, which again would be a positive from the domestic economy. Second largest economy in the world, 17-18% of global GDP. Starting to see that move forward a little bit would indeed also be supportive. So I'm not wanting to play down that risk, but I think there are regional things that we need to take account of, which there's the UK, there's the US, what happened in China, and then there's also Europe and its proximity to the Russia-Ukraine conflict, which has more implications from a European perspective. So regional is certainly the way that we're thinking about it and looking at how that might evolve as a potential scenario.
Yeah, and I think that speaking as an investor with True Potential as well as anything else, I think that I certainly find it reassuring, and I'm sure you guys do as well, and probably the people your team speak to, Hayley, on the phone in terms of clients. The fact that Jeff and his team are across all this, they're not going to be caught out by it. I mean, no one knows where we're going to end up in 6, 9, 12 months' time. But the point is, you're not going to be, you've modelled things, you look at things, you're not going to be caught out by this stuff.
And what we're saying is that actually, if you take a step back, it's impossible to forecast the future. And the one of the best examples I can give of that, just that's relevant at the moment, it ties into inflation. If we look at the monetary policy report from the Bank of England 2 weeks ago, we've got an inflation rate today of 9% in the UK, forecast to go higher as we get into the second half of the year. The report that was published around 6 months ago by the Bank of England talked about inflation at 4.5% at this time. So that gives you the sense of how big an error margin you have to have around forecasts. So that's why point forecasting is probably a fool's errand. But trying to think about the scenarios that you can envisage and modelling those and considering how one wants to position a portfolio is important. But you're not saying that we're going to position a portfolio for one outcome. That outcome might not materialise. So I think taking that step back, acknowledging that you can't, but you want to have a well-diversified portfolio that can navigate through different market environments is what you want to have. That's not to say that returns won't be negative. They have that possibility, and indeed they are negative at the moment, but that's by virtue of where the backdrop is.
It's a difficult mindset, isn't it, Helen, maybe as well, for people who are perhaps watching this and picking up the news and seeing that markets are, there's volatility, as there always is, but to try to understand that it's an opportunity as much as anything else, isn't it? And Jeff and his team are trying to find that opportunity when markets are different. And do you come across that with some Is that part of your job to explain that to clients as well? That there are opportunities in.
Yeah, absolutely. I think it's a very sort of normal reaction to think, oh, I'm going to stay away from the markets during these times. But as I say, because markets are so low, it is sometimes a good opportunity to buy in as well, if that's something that you're comfortable doing. But it's all sort of around your goal and what your goal is with your investments. But I think with inflation being so high at the moment, it's really important not to retain too much cash, even though it feels comfortable to do so. But as I say, it's all around sort of your goals and what your long term view is.
And I guess this is where financial advisors come into their own, right? I mean, have you noticed that your team and you're getting more calls?
Yes.
Just wanting to understand a bit about what's going on.
Yeah, I think from a kind of first response type of thing, the easiest kind of option for clients is to just say, I just want to stay in cash. From what we found, it's just having that relationship with the advisor team and getting the clients to actually speak with someone before that decision is made is a massive thing, because as soon as you pick up the phone, it's like, I want to go into cash with just nothing, like no kind of background thought, because like you say, it is comfortable for them. So there's a lot of callbacks and appointments and everything that we've been scheduling over the past couple of weeks, hasn't there?
It's been challenging, but it's definitely worth trying to
speaking.
Even if it can't be straight away that day, it's definitely worth just holding off on me a day or so. And we do always try and accommodate as many appointments as possible. As I say, it can be difficult, but sometimes just having that conversation, and a lot of people, it's just the reassurance. It's just the reassurance that they're making the right choices.
100%.
Yeah. Good. Okay, Lucy's got a question, which is about logging into the True Potential app. Lucy's saying, I'm investing for the long term. I'm aware the markets go up and down, but how often do you think I should be logging in? So do you want to take that one, Hayley? How often should Lucy be logging in?
I personally think you should be logging in as much as possible. I think you can use the app for so many different things. Yes, you can look on at how the investments are performing. You can have a look at specific policies, but there's so many other features that we can really tailor and utilise for that specific client. So with the launch of the new client site, we've now got a Your Feed, which takes you directly to the morning market videos, the podcasts, and it's a really kind of more personalised service, I think, to what it would be if you just kind of log in to your bank and just see your balance. We've got a fantastic rewards feature on there, which you can use in everyday life. And we actually have got a coming soon feature, which is our personal finance feature. If you've been a client for a little while, you will have remembered it from a couple of years ago. This is where we can link directly with your bank accounts, and it's really utilising and managing your finances. So rather than just looking at, right, okay, I'm up or down this today, it's looking at a whole view of what you are, what your life is, basically. So I think as often as possible, I think it's so easy to log in when you get your kind of biometrics set up and things like that, and it takes a few minutes, and there is always some information on there that is really useful for clients.
I think as well, like they've reintroduced that performance weighted return graph as well, which is really good, because whilst you might log in and see the value going down, especially if you're logging in every day, but if you look at that performance weighted return graph, you can see your performance over the long term, which is what's really important. And it gives a bit of context of, yes, whilst, we're experiencing a bit of volatility at the moment, actually over the long term, you are still up and you've made sort of the right choice.
Which goes to the point about having a long-term goal.
I think she's really kind of hit the nail on the head with her question by saying, I'm investing for the long term. We're saying log in every day, which I think is right, because there's so many features on there. You've just, as a client, got to remember that it's not about the value of your pot today, it's what it's going to be in 10, 20, 30 years' time. And just keep that sort of resolute, so to speak. I think that's really important. But when I log in, I just think, well, okay, it's gone up, it's gone down, but, I'll be looking to take it out when I retire, basically, so I'm not that concerned right now. I think that's the way to think about it is, this is long-term investment, there will be ups and downs, but you'll get there in the end.
And I think there's also the context that comes from using the videos that are there on morning markets to just say, well, this is what's happened in my portfolio, but I can go and click here and I can hear from the team and see, well, this is why that's occurred. And then it becomes more relatable as opposed to just a number with a negative attached to it. It's what's the context of that. It's very important.
I think that comes back to you know, the news cycle that we have as well. You know, everyone generally these days watches 24-hour news. I know a lot of people do, and you get the same, as we sort of say, these big headlines that are there to scare people or to get people to click on links. And actually, if you look at our video feeds, where we're not just looking at one particular, you know, the NASDAQ or the FTSE, we're saying this is what your portfolio's doing, this is what the full multi-asset's doing. Gives you that true picture rather than the scaremonger. They're just the one side of things, you know. I think that's very important to do as well. So yeah, if you see it on the news, log into your client site and actually see what we're saying about it. That's what I would say.
It's so easy as well to actually get to that point. So as soon as you log in, it's literally on the client's overview page. You click on it and it takes you directly to it. So there's no searching through, trying to find articles, Googling things. And that can be quite time consuming. It's just ease for clients. Log in, Face ID's on your phone already. Simply click on the video and that's it.
And it's a lot more specific as well. Like just watching the news isn't specific to yourself and your own investment.
And they'll focus on, you know, what the FTSE's done today. But your whole point about diversification is we don't have everyone's eggs in one basket. They're all over the place. You know, spread there so that, you know, when one bit of the sort of global markets could be up, another bit might be down, and the balance in that, and that's how you find the growth over the long term. We're not all about everything in one place.
Definitely.
It's the opposite of that. Okay, right. Let's move on to where should we go next? We'll go with Lara. What's the best way to get in touch with True Potential? Well, I'll stick with you for this one, Hayley, if I can. What's the best way?
We have multiple ways, so it depends. What's my favourite? I don't know. There's a few different ways that you can do it. We've got, of course, inbound phone calls, which I would say is by far the most popular method of communication. I think anyone knows as soon as you pick up the phone and call someone, you're going to get an answer. We do have a secure message feature through the client site as well, so if it's not necessarily something as urgent and needs an immediate response, the team are working towards 4-hour SLAs on that, so you know that you'll receive a pretty rapid response for sending a message in. And we also have a live chat feature, which is really nice. You can do that whether you've logged in to your app or if you're just on the website or kind of having a browse around. That will come directly through to the team. And they will be presented with one of our faces on the end of it. So you know for a start you're speaking to a person and not like a chat bot or robot or anything like that. Extended opening times, so we work from 7 a.m. till 8 p.m. And it's just kind of what you'd prefer, really. If you've got the time and you can do it right now, absolutely phone up or get on the live chat. If it's something that you possibly need an answer to or any documents that you need to send in, secure message all the way. There's no encryption needed. It's just a drag and drop feature. Really straightforward for clients to use.
And I mean, there are many ways that we, if you like, flip that around, try to get in touch with clients. So we talked about within the app, there's a news feed in there, there's lots of content. This podcast, Morning Markets, we're surrounded by True Insights, and we've got the brand new edition. In fact, just pass us one down, Aidan, would you, for a sec? This will be coming through letterboxes if it hasn't already, and it's on the website, so you can go on tpllp.com and have a look up there as well. But I mean, there are some really good articles in here, you know, around some of these issues that we're talking about on this podcast. So it's well worth having a read of this if it drops through your letterbox, or as I say, go online and get a copy of it, as well as the performance figures in there that Jeff and the team are generating. So well worth getting hold of a copy of True Insight as well. So examples of how we actively, you know, we're not shying away.
No.
In fact, I don't know about you, but you find a lot of companies you deal with. I'm not just talking about investment companies, but, you know, nowhere near as proactive at getting on the front foot and talking to their clients.
I know we do that. It comes back from that starting point that it's about how do we help our clients, and the focus of the business is very much from a client.
Yeah.
And so if we were a client, you want that. You want somebody out there to tell you what's happening. You want to be able to access information. And it's been part and parcel of how the business has built itself, and it's always been core to it. And that's just a different way of viewing how we think about things versus how some of those businesses that maybe don't think about the client first.
Yeah, I think for me, one of the things I say quite a lot is we are very proactive rather than reactive with clients. And I think that really helps the relationships that we've got with them, and also just in times like this does settle nerves. You've got the resources there and the availability to do it, so it is helping.
Right, Maisie has sent us a question in, and Maisie says, at what age should I be considering financial advice? How do I know what's a decision I could make myself or a decision that I should speak to an advisor about? Helen?
So yeah, this is a good question, and I think arguably you could say at any point in your life you need financial advice. It depending on what stage of your life you are, it depends on what type of financial advice you need. You may not need financial advice if you're not sort of fresh out of university, just started your own enrollment pension, but especially when you're making sort of those bigger investment decisions or longer term investment goals as well, it's really important to just discuss that and have a conversation with a financial advisor. And I think it's always important to say that just because you're initiating a conversation with a financial advisor doesn't mean you have to sort of proceed with any advice that they give if you don't feel it's appropriate for yourself. It's also about figuring that out, but I always just say have an initial conversation, see what they can offer you and make a decision from there.
I think you always come across the things as well that it's something that you might not have necessarily thought of.
Yeah.
So if for me personally, before starting I had no experience in finance or my personal finance or anything.
Yeah.
So until you have that actual conversation with someone to see kind of what options you've got, where you need to be, what you actually need. Like when I found out how much you actually need to have a steady retirement, I was absolutely shell-shocked.
Yeah.
So I think just having like conversations like that with the team, it's great for clients to have.
Definitely, and I think that's kind of the crux of it. You don't know what you don't know.
Exactly.
The tax implications are so complex.
100%.
Again, even as a financial advisor, you do still sometimes have to speak to colleagues just to double check things, making sure that you're making those sort of right choices. So it's.
I think one of the first points to say is, and it's coming back to yourself there, Hayley, in regards to how much you need to save for retirement. I think first off, you just need to start saving.
Yeah.
You need to get your pension started. You need to get your ISAs as soon as possible. I also think maybe coming to some of the life events that happen earlier on in life. So, marriage or buying your first house or mortgage.
Yeah.
They're perfect times to talk to people about how do I save for my retirement? How do I look after my family?
Yeah. Or if you're having a baby or something, Aidan, as well, possibly.
Yeah. Not me right now, but, but certainly these sort of major life events that do often come quite early in life and they set you on a path, on a road. They're certainly the times where I would
100%.
need to be considering these things. Certainly.
And like a lot of those things come hand in hand
They
as
do,
well.
yeah.
When you purchase a mortgage, it's really important to look at your protection needs as well.
Yeah.
And sometimes your retirement plans just kind of come into that too.
course,
And
yeah.
you can get everything at once really, which is a lot of people don't think about.
And it's also one of those things that people don't think about it.
Yeah.
They just assume something will happen.
Yeah.
But you wouldn't do that for many other things in life.
Yeah.
If you needed somebody to help you with an extension, you will go and get an architect.
Yeah.
You would go and get a specialist in that area. You wouldn't try and do
If
it
you could see the
yourself.
state of my kitchen, Jeff, I should have definitely done that.
but
Built
that's
of
the
Lego,
thing.
is it?
It would have been better if it was.
We don't think about it like that. People try and you put it to the back of your mind. But it is if you bring it to the front of your mind,
Yeah.
go and speak to the experts that can help
Yeah.
and acknowledge that it's there to be taken.
Well, absolutely. And Richard sent a question in asking, when it comes to paying for financial advice, what are the ways to do that? I mean, is it better to pay a sort of ongoing sort of advice relationship sort of model, or just as you need it, or what are the ways that people can do that in?
Yeah, I mean, there is various ways of doing that. You can pay it as a one-off, as an advice piece, if you will, or as an ongoing fee where, certainly from our perspective in True Potential Wealth Management, the ongoing fee means that you can speak to an advisor at any point in time. So it's moments like now, you can pick up the phone, you can email someone and say, I need to speak to someone, just to reassure myself. And I think that's what's so important and valuable about the ongoing service, is that you've got this constant reassurance in the background. And also, once you are saving for the long term, once you have built up quite a substantial pot, actually having that ongoing advice and that ongoing view on your portfolios, just to make sure that, now's the time to do my ISA allowance and someone needs to get in touch with us. These little moments, and certainly even, how much pension relief you're going to get. These are little queries that the ongoing advice fee covers for you, and I think that's vitally important, to be honest.
Yeah, and tax rules change, quite significantly, and if you look at pensions, the rules on that has changed so much in the short term. So it's always important that you've got somebody there that can kind of cut out the noise again, from what you're seeing on the news and what's actually reality and applicable for you.
Exactly. Well said. Right. Let's go back to Jeff. I'm going to combine a couple of questions for you, Jeff. A double Jeffer.
The double question.
That's right. Let's have bit of Paul's question, who's asking, with markets kind of where they are generally right now and the extra volatility, is TP considering weighting investments more towards cash for the time being? And also Neil has got a question, as a new investor to TP this year, I'd be interested to know if your teams have been planning for things that haven't historically happened. So kind of, are you modelling different scenarios that maybe haven't happened before?
I think there's a couple of parts to both of those questions, unfortunately. So if we think about the modelling side of things, that's part and parcel of what we do. It's part and parcel of what the managers that we work with are doing as well. And there's a number of ways that you can do that. One is thinking, just as we were discussing earlier, applying sort of probabilities to different scenarios that you want to have. So your base case, maybe a bull and a bear case, and thinking about the factors that are likely to influence that and how that influences the asset allocation that you want to make within the portfolio. There is another element to that, which was once you have developed that, you can then use various different softwares and risk models to think about shocking that portfolio to historic events. Now, we've got history as a guide to the future, but it never repeats itself. So you can get a sense of how a portfolio will evolve to certain scenarios, so you can see how that plays out. Does the portfolio exhibit the characteristics that you want? So there are two ways in which one can scenario test and apply stresses to a portfolio to see how it evolves. So that's something that we actively do, our managers actively do, as part and parcel of what we do. In terms of increasing cash allocations within portfolios, that you will have seen that there has been a small increase in the overall cash levels in portfolios, but it's not overly meaningful, and it goes back to the point in thinking around the inflation backdrop as well. Yeah. It's not that all assets perform in the same way in that backdrop. There are assets which will potentially do well, and there are others which will be more challenged, and that's why we've certainly seen this volatility in asset markets over the year-to-date period, as markets have been adjusting to higher interest rates, higher inflation. That certainly has caused challenges within the bond market in particular, areas of the equity market, and I think the question contrasts the US. If you think about the US, yes, there's been quite a significant drawdown in the US market, but you contrast that maybe with what's happening with more value-oriented markets, Japan, the UK, you've had a significantly better performance from those. So it's about having and using the diversification within the portfolio. Yeah. The other key thing to think about on the cash level is each client has got a tolerance to risk. That comes with a volatility profile that each of those clients are allocated into. And by just increasing cash within that, you actually change the profile of a portfolio. So it's about ensuring we have the exposure to the underlying assets that fit within that risk tolerance that the client has signed and agreed to as part of the take-on process. So that's an important point, because to increase cash, you reduce the risk profile. And that's not what we would want to be doing. We want to ensure we keep a consistent level of risk that's commensurate with what our clients accepted when they come in to, say, the balance fund, for example.
Well, just on that point about risk levels, Greg sent in a question which I'll get you to look at, Aidan, which is Greg saying, look, long-term, and you were talking about long-term investing for your goal and everything before, and Greg's saying, well, long-term investing is fine for those, say, midway through, but what about when you're coming to the end of your, maybe perhaps if you're thinking about retiring in the next, well, in the foreseeable next maybe year or two, is that where you would begin to think maybe about coming down the risk level a bit, or would that be the wrong thing to do?
I think, that's certainly a relevant option. I think certainly the first option is speak to your financial advisor, because they might say, things are actually okay, stay in place at the moment, you've got a couple more years than you actually realise, but they might start saying, let's start going down these risk ratings, and that's, again, the benefit of the ongoing advice piece, is that your advisor will have been thinking about this for your plan for some time now. So if it's within the plan limits, say, to start dropping it down, they might bring that into place. And it's certainly an option. I think with drawdown being the major income stream for retirement right now, you've got to look at securing the capital within there. So certainly speak to your financial advisor. If it's the right thing for you to do, then you can easily do that through ourselves as well. Yeah.
Good.
I think the other aspect of that is also thinking about how you want that cash to work. into the longer term as well.
Yeah.
Because you might be in a position where you're thinking about retiring when you're 55 or something like that. But if you think about, you've probably still got another 30 years of enjoyment there as well. So you need to balance those two things between
very true.
where you want to be today, but then thinking about your needs over that longer term. So that's also why, I suppose, to your point, Aidan, advice is going to be really crucial at that point.
Yeah.
To think about how you manage those two things, the need for income, whether it's through drawdown or natural income, but also offering yourself that ability to continue to grow capital as well.
Yeah, that's it. That's probably this question is something that we get a lot, especially
Yep.
for those who are coming up to retirement. They say, well, I'm coming to the end of my investment strategy. But when you actually have that conversation, you know, lots of people do want to do drawdown, and actually the chances are you'll be drawing down for the rest of your life, which is still long term. And whilst the investment strategy, you might want to tweak it a bit and make changes, as I say, de-risk if it's appropriate for you. It's still very much a long term investment.
Yeah.
Yeah.
Keeping your money working for you.
Yeah.
Yeah.
Yeah. Okay, right. I'm going to do another double Jeffer and combine a couple of questions, Jeff. One from Mohammed, who's asking, bearing in mind what you were saying before, nice easy question. How long do you think markets will take to get back to where they were before maybe the last couple of months? And also combines with Nick's question, who's asking, what do you think it'll take for markets to stabilise a bit? We've had a lot of volatility and world events in the last few months. I mean, is it as simple as waiting for those to subside, or is it more complicated than that? But I mean, in general, they're both asking, I suppose, how long do you think it'll take to get back to where we were maybe at the start of the year?
Yeah, I suppose if we take that back, so what we know what's been causing some of the volatility that we've seen in markets. Now, if we could see some stability coming through, what would bring that? One, thoughts on where inflation is going to peak, because that will then allow markets to try and anticipate where central banks want to take interest rate policy to. So we know at the moment we've got a trajectory that will take UK interest rates to 2.25 by the end of the year. We know that the Fed have set in train in their minutes last night, really confirmed it. Another 250 basis points, so 0.5% rate increases at their next two meetings, takes them to 2% by the summer, and then heading towards 3 by the end of the year. We also can start to observe potentially inflation rates peaking. If that was to be achieved and we're to start to see inflation coming down, I think that would also be a positive and help markets quite a lot. Yep. So in the US, we've went from 8.5 to 8.3 last month. You can see some stability there and gradual coming down. That would be a positive as well and take away some of that uncertainty. So the market's kind of caught at the minute between how far rates have to increase to bring inflation down, and can that be achieved at the same time as not having a very detrimental impact on growth. So that, to my mind, is kind of the one thing that we need to look at. Clearly the other point is what's happening in Russia and the Ukraine, and the impact that is also exacerbating into uncertainty, but also that inflation narrative, just given the commodity backdrop, what we're seeing in energy markets, but also what we're seeing in food markets. And if that was to be resolved, come to a conclusion, that would also be favourable from just taking a risk down from markets' perspective. So those are the things that, to my mind, are really important. When they come through, will probably be important to then thinking how asset markets themselves have performed. And thinking about that, and this is why diversification is important, and it creates opportunity. Some areas of the market were very expensive at the beginning of the year, particularly on the bond side of things. We've seen that correct quite meaningfully. So there are opportunities there to help think about how we position portfolios going forward as well. I'm not going to give a point estimate as to when I think markets will get back, because that's
Jeff,
Mm.
you
not what we're
could
about.
look back to fairly recent history. And I remember when COVID sort of, struck in terms of it became part of everyone's daily life back in, say, March 2020. There was a big drop in the markets. There was that panic, if you like. But markets recovered and ended up in a fairly, I don't know what the exact time frame was, but looking back, it felt like within a few months we were back, and in fact higher than where we were when we went into COVID. So markets do recover.
Markets do recover, and I think that's the important thing about looking at the long term and looking at just a chart and seeing that picture in front of you, that yes, there's a volatile journey, but at the end of the day, one has to take some risk to be able to earn that return through time. And it is through time you can see the benefits of being invested, and having exposure to what we talk about as risk assets to earn a return.
Yeah.
Grand. Okay, let's take a final question that we've got time from Stuart, who Simon, I should say, who says something I want to know is about DB pensions. Aidan, I'm going to come to you for this one.
Okay.
If you transfer a DB pension into a personal pension with TB, and your DB pension has protected pension age around it, do you lose that protection pension age once you've transferred in?
Okay, so to start with the question, DB pension, that's a defined benefit pension or occupational pension or final salary pension. They come under a couple of different titles, unfortunately. But in regards to protection, first off, speak to a financial advisor about any occupational pension you have. If it's over £30,000, you've got to get advice for them to recommend a transfer to a personal arrangement. But a lot of these things in regards to protection ages, so you might have to be able to take your tax-free cash or to take some of your pension money at age 50. It's very scheme specific. So some you may be able to retain it, some you may lose it, and we see some curiosities where if yourself and another member of the scheme move out at the same time, it gets protected through that route. So I'm not shirking the question by any means, but it's certainly one, you need to speak to a financial advisor. We've got a team at head office who deal with occupational pensions, so they can help you with it as well. But certainly it's a curious one. Sometimes you do, sometimes you don't, unfortunately.
Well, I think that's the point, isn't it? I think to go to Simon's question, I think the point is that, I think as you were talking about earlier, a lot of complications around pensions and different schemes and different rules. So there isn't really one simple answer because no two pensions might necessarily be the same. So speak to an advisor is
that's the
best.
That's
the best advice. It is in fact the answer. All right. Well, look, thank you very much for sending all of your questions in, and keep them coming as well, because we actually genuinely enjoy answering them and hearing from you. So please do continue to send your questions in the usual way in the comments box. You can get in touch. Hayley, you mentioned lots of ways that people can get in touch with us, and we'd love to hear from you, so do keep them coming in. Right, as I mentioned at the top, we're doing this on a Thursday morning rather than a Friday, so I don't know, I tend not to think about my weekend until I get into a Friday, so I don't really want to ask you about what you're doing on the weekend. Maybe you've got a plan, maybe you haven't. So I'm going to ask you a different question. Although actually, Aidan, I can tell you want to tell me about your weekend.
Well, I know.
You're itching to tell me what you've got on for this weekend.
We were prepared for the
plan
weekend.
ahead, Monday morning I think, right, what am I going to do at the weekend, just to make us feel better for the week.
Come on, then, tell us then.
Well, it's starting to get a bit nicer now, so I'll be spending Saturday day cleaning out the sort of garden, making it look a bit nicer for couple of barbecues and stuff like that, hopefully. And then Saturday evening I'll be watching the Champions League final, which I'm sure many people will be doing. So
well, I'm going to try something new and ask you all a different question then, rather than just ask you the same one. So
okay.
Helen, I'm going to ask you, what's been the highlight of your week so far?
Oh, the highlight of my week, knowing that I'm on holiday next week, so
okay. I mean, we love you too, but you're allowed to have a holiday from us, it's fine. Anywhere nice?
Just to Scotland. So Scotland for a nice long weekend.
You don't need to say just Scotland. Scotland's right.
Yeah, you're
beautiful.
right. Not abroad. That's what I meant. Not abroad, but looking forward to that.
Oh, very good.
Nice
Well, have a nice time in Scotland. Hayley, your question is, what are you doing straight after the podcast today?
Oh, good question. This
and
is where
should be a fairly easy one to answer.
I mean, this is where baby brain picks in. I will be going up to see one of the teams who I used to manage, as they're now moving across to TPI. So I'm going to go and say some final goodbyes and do some final handovers with them.
Yeah, very good. Yeah. Jeff, well, I know what you're doing after the podcast. I know what you're doing for the rest of the week, which is looking after everyone's money. So my question to you is, what are you having for your tea tonight?
That's a really hard question.
I don't know.
What would you like to have for your tea tonight?
What will we have tonight? Chicken Kievs.
Good
two
choice.
of them, plural.
Just the two.
Oh, just the two. Well, there you go. You see, if I was sending questions into a Q&A, these are the kind of daft questions you do for me. So that's a good job. Your questions are far better. But anyway, thanks for sending them in. Thank you to all of you for answering them.
Thank you.
And as Jeff said at the very, very start, don't forget to hit subscribe, because you won't miss Morning Markets and you won't miss these kind of insightful podcasts, especially things like, what are you having for your tea tonight? So do hit subscribe. But for now, thanks for watching. We'll see you next time. Bye for now.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.